Oh, okay. What is going on, guys? Welcome to Stock Talk with Nico Criticos. Today, we're going to be going through Moody's Corporation stock, $472 a share with a market cap of $84 billion. And over the past year, this stock is now flat, which, if you've been watching my videos lately, you know a lot of the stocks I've been looking at. I always am pointing out the fact that when the stock has been flat or has not moved for a period of time, but the fundamentals and the financials of the company have improved, that's a great sign to buy. So, past 5 years, the stock is up 73%. So, a bit of underperformance there. But again, I think this, with the stock being flat this past year, it is a sign that the stock is undervalued. So, let's get into it. I think I put $1,500 or $1,600 in to start. And if we look at this company's financials, we can see that revenue has been trending up now since 2023, looking pretty good, $7.5 billion of trailing 12-month revenue. And we are looking at EBITDA net income that is also growing. Net income's at $2.2 billion. So keep in mind, this is not, a cheap valuation compared to most stocks, but for this stock, it commands that certain premium, and that's just what the stock trades at. Free cash flow, same thing. Nice uptrend, $2.6 billion. EPS, cash to debt ratio is not that good, but sometimes you got to overlook things like that. The dividend growth is very nice, and the shares outstanding has been decreasing at about 1% a year, so they're slowly buying back shares. And then let's check out the history of the PE ratio. So let's zoom up on this. As you can see, right now we're at about a 37, and that is the cheapest it's been since 2023. Okay. So again, past 2 years, the stock has been mainly been trading at about 43, 42 times earnings. Now we're down to a 37. And if we go to, let's see here, let's go to Yahoo. Forward PE of 28, trailing PE of 37. As you can see, the forward PE is much cheaper than where it's been the last couple of years, trading as high as a 37 multiple times. We're now down to a 29. So I like that. And analysis, we have EPS last year going from 12.5 to this year expected 14.7 and then 16.3. So very nice numbers there. If we take, the weird thing with this is, could this stock go back to trading at 30 times earnings? Sure. It sure can. But the fact that it's been at this valuation for over 2 years now, that's, there's a good chance the stock will keep trading in around 40 to 42 times. But there's also a chance it goes down to 30, right? So if it does stay in this 40 range, then we're going to be looking at a stock price of 40 times 16.3 is $650, which is a huge increase. If the stock goes down, this is in the case of a very bearish cycle for the stock, we are looking at $489 where the stock, so that's still more than where the stock is at right now. That's what makes me pretty confident with this. If we want to look at, so the forward PE ratio, yeah, this is a great price for the stock, because even if the stock is doing, if they do 16 times, it's because that EPS jump is huge. 12 to 14 to 16 is a lot. What is that? That's a 33% jump, right? 4 out of 12. So 33% jump over 2 years, that's a lot. So this one is, I like this stock. It's got a solid moat. If we go to what super investors are doing, we can see the red flag here is that a lot of super investors are selling this. They've been selling this past quarter. Now that they could have sold, you know, you talk about Q3. Well, Q3 could have been, you know, September, right? They could have sold at over $500 a share, which probably is what happened, considering after September 17th, the stock has been trading around $480. They probably sold over 500. So that's kind of how I look at that. And there's also 18 super investors that own this stock. Okay. So very nice. for me, it's worth taking a chance on. And if the stock drops, if I, go down 15% or something on this stock, then okay, I'll make it a little bit bigger. And I don't think there's much to worry about with this one. So I like this stock a lot. Let me know what you guys think, and I will see you in the next video.